Hey everyone, you know us. We are all about building wealth, making smart investments, and understanding where the world of money is headed. And right now, all signs point to Ethereum. Let's unravel Ethereum's incredible evolution and why it still matters in 2025, even more so than it did in 2023, or even back when it first launched in 2015. This isn't just about some volatile crypto, guys. This is about the technology that could reshape finance as we know it. So buckle up, hit that like button to support Wealthwise, and let's dive into the future of smart money. Alright, let's cut through the noise. Ethereum isn't just the number 2 crypto by market cap, it's the heart of decentralized innovation. Back in 2015, a 19-year-old named Vitalik Buterin launched Ethereum with a bold vision to make the blockchain programmable. See, Bitcoin was great for sending money peer-to-peer, but Ethereum? It lets you send instructions, smart contracts that automatically execute when conditions are met. Think about it. Digital agreements without needing lawyers. DeFi decentralized finance without needing banks. Ownership without middlemen. Fast forward to today. Ethereum boasts a market cap around $220 billion, with its price hovering near $1,800. But the real story? It's the engine behind thousands of apps, tokens, and even entirely new economies. And 2025? This is where things get really interesting. We've seen massive upgrades, increased adoption, and a level of refinement that's turning heads, even on Wall Street. This isn't just about buying a coin and hoping it goes up. This is about understanding the technology that could revolutionize how we interact with money and the internet itself. So what exactly runs on Ethereum? Let's break it down into real-world applications. First up, DeFi decentralized finance. This is where you can borrow, lend, and earn interest on your crypto, all without banks or brokers, just code and algorithms. Then there are NFTs, non-fungible tokens. Ethereum is the birthplace of digital collectibles. From art and music to in-game items and virtual real estate, NFTs are changing how we think about ownership in the digital age. Stablecoins like USDC and USDT are the backbone of crypto payments and trading. And guess what? They live right here on Ethereum. We also have DAOs, decentralized autonomous organizations. Imagine Reddit combined with a corporate board where token holders vote on everything from investments to product development. That's the power of DAOs. And let's not forget Web3 apps. From decentralized identity and insurance to blockchain gaming and global payments, Ethereum powers the decentralized internet. It's literally becoming the digital economy's operating system, and it's only getting started. Now, in May 2025, Ethereum rolled out its biggest update yet, the Pectra Upgrade. Don't worry, I'll spare you the technical jargon and break it down into what really matters. First, we have smart accounts. Your crypto wallets just got a major upgrade. They now work like apps, allowing you to add features like social recovery for security, limit spending controls, or even automate your bill payments. Talk about taking control of your finances. Then there's the boost to validator stakes. Validators are the backbone of Ethereum security, and now they can stake more ETH more efficiently. This is huge for institutions and solo stakers alike. Fewer nodes, higher staking rewards, and even better network security. And then there's Blob Boost. Yeah, I know the name sounds a little silly, but this is actually a game changer. Ethereum can now handle twice the data for Layer 2 networks. What does that mean for you? Lower transaction fees and insanely faster speeds. This is what Ethereum 2.0 was always building towards, and it's finally here. Cheaper transactions, smarter wallets, more room to grow. The future is looking bright. Let's talk about how Ethereum actually works. It's moved away from the energy-intensive proof-of-work model used by Bitcoin and now runs on proof-of-stake. Instead of burning electricity to secure the network, Ethereum rewards validators who lock up or stake their ETH. And as of 2025, over 28% of all ETH is staked. That's billions of dollars working behind the scenes to keep things running smoothly. For stakers, this means earning a passive income of around 4 to 5% annually, turning ETH into a yield-generating asset. It's like holding a crypto bond. You hold it, you earn from it. But here's where it gets even more interesting: the burn. Every transaction on Ethereum includes a base fee that gets destroyed, literally burned forever. So when the network is busy, the total supply of ETH actually shrinks. This means that in 2025, Ethereum is occasionally deflationary, a rare and incredibly powerful trait in the world of global finance. It's like having a digital asset that becomes more scarce over time. Here's Ethereum's secret weapon, Layer 2 scaling solutions. Think of it like this. Ethereum itself is incredibly secure, but it can get congested. That's where Layer 2s, like Arbitrum, Optimism, and ZK Sync, come in. These Layer 2s act like express lanes on a busy highway. They batch thousands of transactions off-chain and then settle the results back on Ethereum. This keeps things lightning fast and incredibly cheap. So, the next time someone tells you Ethereum is slow or expensive, they're not using the right tools. By becoming the secure settlement layer for all of Web3, Ethereum expands its reach across gaming, DeFi, NFTs, and payments, all without sacrificing security. Here's the thing. Ethereum isn't some fringe experiment anymore. Banks are watching, governments are taking notes, major institutions are getting involved. We're talking about central banks exploring Ethereum for CBDC platforms, digital versions of their own currencies. We're seeing enterprises using Ethereum for secure and transparent smart contracts. And institutional-grade funds are even looking at ETH as collateral. Giants like Fidelity, JP Morgan, and even Goldman Sachs have all acknowledged Ethereum's unique value proposition. And with ETFs potentially on the horizon, big money is lining up to get a piece of the action. Ethereum is becoming Wall Street's on-ramp to the world of Web3. Now, I know what you're thinking. What about the price? Well, analysts are a bit split on the short-term outlook, but long-term, that's where things get really exciting. ARK Invest, for example, sees ETH as the foundation of a $20 trillion financial revolution. That translates to a price target of over $150,000 per ETH. Let that sink in for a second. Fidelity has praised Ethereum's careful and deliberate approach to upgrades, while JP Morgan believes ETH will actually outpace Bitcoin in adoption-driven cycles. And the roadmap for Ethereum's future? It's all about further scaling through sharding, more Layer 2 innovation, smoother staking and unstaking processes, and a continued focus on those deflationary mechanics. Remember, Ethereum isn't trying to replace Bitcoin. It's building the rails for an entirely new digital economy, one that's open, transparent, and accessible to everyone. So, what have we learned today? Ethereum is more than just a cryptocurrency. It's a revolutionary technology that's changing the way we think about money, finance, and the internet itself. For more smart breakdowns like this, hit subscribe, turn on notifications, and explore the world of modern money with WealthWise button.